Buying a house is the ultimate dream. Renting is just throwing your money away, every month down a black hole, right? For decades, we've been fed this fairy tale by our parents, banks, and real estate agents. But if you actually do the raw math in 2026, with mortgage rates around 6.5%, rising property taxes, and stock market compounding,
buying a home right now might not be the automatic win everyone assumes it is.
When people compare a $2,500 rent to a $2,500 mortgage, it looks like an even trade. Buying wins, right? These are what investor J.L. Collins calls unrecoverable costs, money that never touches your equity. Mortgage interest, property taxes, insurance and PMI, and first, mortgage interest. On a 30-year fixed loan around 6.5%, over the first 10 years, more than half of every payment goes straight to the bank as interest. Second, property taxes. In the US, states like Texas or New Jersey charge some of the highest rates in the country.
In the UK, it's council tax plus stamp duty. On a £400,000 home in England, that's over £10,000 up front, before you've paid a single mortgage installment.
Third, maintenance. Water heater blows, $2,000. New roof, $15,000. Rule of thumb: budget 1 to 2% of your home's value every year just for upkeep. Now the biggest hidden factor: opportunity cost. To buy a $400,000 home, you typically need a 20% down payment, $80,000, plus $10,000 in closing costs. Call it $90,000 total. What if you don't buy? What if you rent instead and invest that $90,000 in a low-cost S&P 500 index fund? At a 10% average, money roughly doubles every 7 years. Over 30 years, that $90,000, left untouched, could grow to somewhere around $1.5 million, without a single call to a plumber at 2 a.m. Important, this is a long-term historical average, not a guarantee. Markets go through real downturns along the way. But even the more conservative real, inflation-adjusted return of around 7% implies a double. It still turns that $90K into a substantial sum over 30 years. So how do you decide for your own situation? Use the 5% rule, popularized by financial analyst Ben Felix. Take the home's value, multiply by 5%, divide by 12. That $2,083 is your break-even unrecoverable. If comparable rent is less than that, renting is mathematically you invest the difference. If rent costs more, buying starts to make more sense. Buying a house isn't purely a financial decision. It's a lifestyle choice too. Want freedom to renovate, plant roots for 10+ years, and stability? Buying is great. Want flexibility and faster wealth building through liquid investments? Renting isn't throwing money away. Renting is buying flexibility.
Don't let outdated advice run your 2026 finances. Run your own 5% rule, and put your money where it actually grows.